We've just seen Bitcoin confirm a weekly close below the 50-week simple moving average, which is the line in the sand that typically governs the bear bull cycle for crypto. But I'd like to point your attention to one particular indicator that is far more powerful than the 50-week moving average, and that is the return of the mustachio. That's right, in both prior iterations, we've seen the mustachio return and cause an absolutely parabolic upside for others, the altcoins versus Bitcoin. We saw it happen here in October of 2021. We saw it happen here in November of 2024, the insanity that led up to the Trump term beginning. And finally, we have just seen it happen here in November of 2025, the year after the halving. And this indicator has literally never failed, and thus it is pre-written in the stars that we will see the most insane and life-changing alt season that we've ever seen in our lives. You're welcome. All right, in all seriousness, we need to talk. Bitcoin has confirmed a weekly close under the 50-week moving average, which everyone and their grandma is looking at to establish that for certain now the bull cycle is over. And we are now in extended time after the supposed astrological top of the 4-year cycle, which was predicted to the very specific day by a Reddit post in 2023. I even posted this on my Twitter and talked about it on the day it was happening. We also experienced a historic liquidation on October 10th, which completely crippled and kneecapped an already struggling altcoin market. And that leads everyone to ask a very reasonable question, which is, 1, is Bitcoin structurally now in a bear market? 2, how is this possible if we never got our euphoria phase, if the 4-year cycle didn't really play out the way that we've all known it and loved it to play out for the past 8+ years? How is it possible? And 3, is Bitcoin in its own world right now, or is it indicating weakness in the larger stock market and global economy? Is Bitcoin signaling the start of a global recession? We're going to answer all those questions as well as give a trading plan based on this new information, this confirmation of a close under the 50-week moving average, which significantly increases the chances that Bitcoin's run is done. So we need to ask some hard questions, but we're also going to make a plan as to how this will play out, because having a plan is the key to moving forward. Because there are some absolutely monstrous pieces of information that we've just gotten today that I think give an extremely clear roadmap for what will happen over the coming weeks and months in the markets. This one is going to be jam-packed with information front to back. And the first thing we need to talk about is, what is happening? So as we can see here on the weekly chart, we've had this first close under the 50-week moving average, that blue line, which is sitting at about 102,000. And then instead of bouncing up, we've just completely plunged below it, which is much more reminiscent of this stuff over here than it is of this stuff over here, right? We're looking a lot more like an end of cycle plunge here, which is not what we want to see. But let's go back just a step before this and let's figure out what happened here, right? We had this swing failure pattern where Bitcoin went over its prior high and then rapidly came back under it. And it coincided almost perfectly with, yes, the astrological top of Bitcoin. If you believe in astrology and that every cycle needs to be to the day, the exact amount of time, then sure. But it also coincided with Jerome Powell talking at the Federal Reserve about how they were not comfortable continuing to cut rates or continuing to ease the cycle, ease conditions while the government shutdown was happening. Obviously, as the government shutdown started, there was pretty much a lack of data, and people started to look at this as bullish, like, oh, there's no data. Markets should just continue to pump. And so we saw the markets continue to pump into this October top. But then Jerome Powell came out and said, hey, look, while this government shutdown is happening, we don't have enough data to continue to cut rates. So we're not going to continue to put the foot on the gas there. And that led markets to get spooked, thinking that the free money train, the easier liquidity conditions, might not just be rolling in the way that we had thought they might once the cutting started. And this turned the shutdown from an ignorance is bliss type shutdown, no data is good data type shutdown, into a panic where the market said, okay, we actually need the data now, or else that gravy train that we want to continue to stimulate our assets, to continue to stimulate markets in the form of rate cuts and potential balance sheet expansion cannot continue to come. As a visual representation here, we have the FRED database, the Federal Reserve database here. What we see here is this is the Treasury General Account. This is the government's spending account, their checking account where they spend money. And as you can see, this has been growing, right? When it grows, that means that money is being taken out of the economy, or rather not put into the economy. And they've been taking this out of the economy since a low of July here. So since July, it's been uphill battles for altcoins, crypto in general, but the markets in general. So this has been a dry condition for markets. And then we got the government shutdown and it made things even more dry. Combine this with this yellow line, which is the Federal Reserve just overall balance sheet here, which has been shrinking since 2021. And you'll see that these two forces together were putting a ton of strain on markets. What we know for sure is that this yellow line is going to stop going down very soon in December 1st. So that's just a few days from now. And this is the first time we've seen a pause, the vacuum cleaner turning off, sucking money out of the economy in a very long time. So one negative stimulus is going away. Secondly, we know that at some point they're going to start spending money from the government to stimulate the markets. And we now have a clue for the first time in a very long time how they might be trying to do that. Because a lot of the thought process was, Trump, he's going to sign the Bitcoin chart. He needs to stamp his name on the S&P 500 chart. He's a markets guy. He's going to pump markets to the sky, to the heavens. But we just found out for the first time a little bit about their strategy. Because if you've been following crypto at all, if you've been following the modern political landscape at all, you'll see that the Trump trade and the crypto trade have largely been intertwined. The optimism about Trump has largely been expressed on the Bitcoin chart and the crypto charts, especially the altcoin charts. What we saw is that coming into the Trump administration, there was extreme optimism about what would happen here to the altcoins. These are the altcoins excluding the top 10, the others, the real deep alts, the things that I like to trade. And there was so much optimism. But once he got into office, you got Trump coin, tariffs, scares, a lot of things that made it feel as if this optimism around crypto wasn't maybe as holistic, organic, and actually overall beneficial as we had wanted. More importantly, legislation around crypto, the Genius Act, the Clarity Act, all of these things have been slower than anticipated, with the actual market structure bill not even approved yet, but actually expected in the very near future. So these things together show that the optimism around what's happening with regards to Trump and crypto faded dramatically as soon as he actually came into office. But what we also know from this chart, this yellow line represents global liquidity, okay? And the bar pattern represents altcoins as traded against Bitcoin. And as you can see, as this global liquidity has come down, altcoins have continually suffered against Bitcoin. And the patterns are actually extremely, extremely similar, the way that these two match up, the way that these two charts play. And so if global liquidity ticks up, it seems very, very likely that altcoins would start to go crazy. And we happen to know a little bit now about the timing in which global liquidity, specifically American global liquidity, which America leads global liquidity, is going to change. That's right. Trump is saying that there's a $2,000 tariff dividend that will be sent to Americans by mid-2026. Just use it as June 2026. Now, why would this be so important? Well, we know for a fact that the optimism around crypto has largely fluctuated. The optimism around a lot of things has largely fluctuated with the optimism around the way Trump will impact the economy. And so far, Trump has not been able to deliver on making things cheaper, on making companies more prosperous, and has a lot to do with all of the trade deals, the trade wars, the tariffs, all of the uncertainty introduced into the economy. Now, with the government shutdown and the rebuild of the Treasury general account and the announcement of these tariff dividends with the timeline of mid-2026, it's very, very clear that Trump is playing for the midterms. If you've been following this at all over the last few weeks with the Democrats sweeping in this off-year election, it wasn't a huge amount of elections, but it was enough to show that there is a swing back of significant key groups of voters to the Democratic Party, the kinds of voters that helped Trump get elected. He's no dummy. He knows how this works. If he doesn't pull the economy out of a nosedive right now and deliver some massive wins to your everyday working man or just to the country in general, some relief, then he and the Republicans are going to get the boot in 2026, and it's going to swing back to a House controlled by the Democrats, investigations into Trump, investigations into his meme coin, investigations everywhere. And it's not going to be pretty for the administration, for markets, and it will likely lead to things being very weak for the Republicans coming into the next presidential election. The scoreboard is very clear here, and everything happening is clearly being lined up to benefit the 2026 midterm election. So while many people think, okay, it's very likely that crypto enters into a structural bear market for 2026, I'd like for us to consider a few other things. One, we need to understand, is this just crypto, or is the entire economy plunging into a bear market? Is the entire economy in jeopardy? We will look into that. And spoiler alert, it's not actually as bad as some may lead you to believe. And two, we need to see, have there been any times in history where similar factors have stacked up? Now, the comparisons to 2029 are pretty significant here. Obviously, a lot of people have made this comparison, but you had Bitcoin rip here, and this was against a contracting monetary regime. You have the same, but it's over a much longer period of time, where essentially things are rough from monetary policy standpoint, but Bitcoin's grinding up while altcoins are grinding down. So you could argue that this is just like 2019, where essentially you had Bitcoin top out here, but there wasn't much excitement. People were still very brutalized from this entire collapse from 2019 or 2018 down to 2019. This was way too hard to stomach, and so this run-up didn't inspire much confidence in crypto. Now, I think the FTX collapse, all that complete incineration of trust, has led for this particular breakout to be a little bit hard to trust as well for some reason. And then you had the meme coin super cycle, which obviously on this channel, we played some meme coins, but we certainly had warned the entire time that it's just a very strong path to zero because they're non-differentiated. You can create them very quickly, as opposed to utility coins, which at least take a team building stuff, some real good faith amount of effort to create. So again, there's a lot of reasons, that's not the point of this video, that this could be like 2019, which 2019 had a much more delicate sell-off. The things that I've brought up a few times here is, how are you going to have a complete collapse if there hasn't been a euphoric blow off top? You can't have the euphoric downside without the euphoric upside. And so looking at Bitcoin's top here around 126, I mean, if it comes down about 50%, 40% here, that puts you at this 74K level, which was the bottom from earlier this year, and I think could be a very, very meaningful level. I think worst case, you'd see it come down, maybe a little bit below that, but I would say that that's where I'm looking to if this is a structural bear market. We also know that everything is being played for the midterms. I don't think it would be right to expect for there to be a one-year consolidation, because 1 year from the top of October leaves no time before the election for things to reverse course. Trump needs to show that things are reversing course by at latest Q2, Q3 of next year. Things need to be piping hot, ripping hot, right out of the oven, too hot to take a bite out of. That's how hot the economy needs to be coming into the midterms if he hopes to save this from being a blue sweep. So whatever bag of tricks they have, the Treasury general account, stimulus checks, and also the replacement of the Federal Reserve chair, which will lead to much more dovish policies. We know that that is the goal of Trump, is to have a totally dovish policy, almost zero interest rates, and likely some expansion of the balance sheet, which is already being talked about by Fed Governor John Williams. If you recall, we talked about this very recently, where the Fed president, the New York Fed president, John Williams, believes that there is sufficient liquidity strain in the system and that balance sheet expansion, aka QE, lots of letters there, is actually appropriate. So we have several pieces of information that show that massive amounts of liquidity are coming. We also know that the ISM, which we've been tracking, is still reflecting bear market conditions. Again, here you can see Bitcoin having its 2019, really this was a mean reversion. You had this huge collapse, then a mean reversion almost up to the 50% level, a little higher, but it closed around 12K, which is almost exactly halfway between the bottom and the top here. Anyway, you had this mean reversion bounce in 2019 that happened as ISM was down here in the doldrums, well under 50. And then you have the same thing over here happening where ISM is in the doldrums and you have Bitcoin, having potentially a weak top out. Now, of course, it is possible that Bitcoin runs its way up, and that's precisely the position that I'm taking. So reading the tea leaves here, we can assume that President Trump and the administration will do everything in their power to create more spending into mid-2026 and to rip the economy into the elections. The question is what happens between now and then. Well, the reality is right now that the only reason they haven't been spending, the only reason they haven't been dropping interest rates, the only reason Jerome Powell has been so stubborn is, of course, inflation. And so to actually give the space for the federal administration to stimulate the economy without stimulating inflation into very dangerous territories, it appears as though their actions right now are creating a deflationary shock, aka hurting markets, hurting the economy, so they can then come in and stimulate it and make things better into the election. That's what it feels like the game plan is. If you could argue this is a game plan, that's what I think their game plan is, which is effectively to say, I don't think the liquidity cannon is flipping on as fast as it will need to be to make an extreme bullish scenario play out this month. Now, Ben Cowan has gotten it dead on this entire run. He's the only guy who's predicted no alt season. Obviously, I'm the guy who predicted all the alt seasons. That never happened. And mind you, I will do a video very soon talking about all the losses that I've sustained because it's been significant. I don't just say things here on YouTube. I say what I'm doing. And the last few months have been just very, very painful. So if you're going through some pain, just know I'm going through it with you, and I will be showing in depth the types of losses that I've sustained, and they're significant, right? They're significant. I'm not saying this for sympathy. I'm saying this so you understand that I am also riding in this boat with you. And I think it's important for me to share the ups and the downs, because a lot of content creators just simply don't do that. They want to say, oh, I always make money, I always do well. Well, we all know I haven't been bang on the money these last few months, and I can share with you some of the actual real consequences that I've endured in my portfolio as a result of that. Very, very intense. But it is just one round, one battle in the war. It is not the war itself. So Ben Cowan says here, while he thinks that they will go to the 200-week simple average, which is essentially the bear market target of 60 to 70K, that's where he thinks that this bear cycle will conclude. He's also saying that we will have a test of the 200-day simple average, which is up here. And you can see that each time a bear market happened, there was a retest. In this case, sometimes a few weeks to a few months after that, Bitcoin goes and makes its way up there. And that would be the time that if you want to de-risk things, I think that you'd want to rally up there to de-risk things into a rally, not to de-risk things into a low like we're at right now. Bitcoin has seen almost a comedic level of sell-off, almost an absolutely unthinkable, relentless downtrend with 1, 2, 3, 4, 5, 6, almost consecutive red candles with this one little blip of hope. It has been absolutely brutal from this 107 pivot. And before that, it was pretty brutal, right? There's been a few green days in this whole move. Otherwise, it's been almost nonstop, relentless downtrend, which as much as it's fun to hop on the doomer narrative with Bitcoin, the reality is it's never as bad as that. It's never that bad. And I believe that we have probably seen an overextension of this down move and that there will be some bounces back up. You never want to sell on the capitulation candle. You want to wait for the market to get some sense and to push back up, because that's how markets are. I think it's also worth talking about how the market has become way more institutionalized, way more financialized, and that it has not functioned at all like prior markets, even the 2019 example. Now remember, this 2019 move was nothing like what we saw. From, what was this, February 19th up until June, we saw a over 300% move. Just a couple of weeks, really. And then you got this 4x plus move out of Bitcoin rapidly. That is very vicious. And it's not at all like this staircase stuff that we saw play out this cycle. Like, this was not at all these parabolic moves. These were staircasey, financialized, institutional looking moves. Even as much as it grew, these are not these types of extreme parabolas that we're used to in Bitcoin. So the market has totally changed. Even if the overall moves over a long period of time can sort of be pattern matched sort of to 2019, it's also a totally different market. And I think it's worth understanding that I don't think Larry Fink and co want their new shiny toy of Bitcoin, which has been their biggest product launch in history, their ETF, which now has hundreds of billions of dollars, over $100 billion in it. They do not want their new cash cow to suddenly become so unpopular. They will definitely provide an institutional cushion as things go down. And I think that the bear market will not be nearly as bad. So a couple of things to recap. One, I'm putting this information out not to say we're in a bear market for sure, but we've violated a key condition, which is the 50-week moving average. There's also not just the United States, but every single global government is looking to stimulate. We have the US preparing stimulus checks. Japan is preparing a $110 billion stimulus package. China approved a $1.4 trillion stimulus package. The Fed officially ending QT. The US is issuing $1.9 trillion in treasuries per year. Canada is restarting its QE. Global M2 money supply is recovering $137 trillion, and global rate cuts are at 320 plus over the last 24 months. Now, of course, he's saying, how can this not create another wave of inflation? And that's because essentially the US is trying to time it in tandem with this deflationary shock that we're experiencing. So short term, the waters are murky. But as we start getting into sort of Q2 of 2026, I think that we start to see a massive liquidity impulse. And because of today's announcement, we now know that the Trump administration is going to be playing for the midterms with liquidity. That is going to be their particular tool. They know they've screwed the pooch on this, and they need to now make it right by trying to give out free stuff, the same way every politician does it. And usually the inflationary impulses from things like stimulus checks won't hit until several months later. So they very well may win the midterms with price stability and without seeing things tick up too dramatically before that election. They may be able to hit that sweet spot, but believe it, all these global governments are trying to stimulate. And yes, it will be inflationary, but in the end, they need to do something here. They need to do something. So here is some very actionable things that I'm going to be doing. Very simple, right? Once we get back up to Bitcoin here at 99K, which I believe it will run up and at least test this. That's my particular opinion. It might not, but I think that we'll see retest back there. If not in the next few days, at least in the next few weeks, I believe we will see a run back up to this level. Now, once we do that, the question is, do we actually make our way up and above? That would be a huge sign. But we actually really need to take out this prior high of 107 before there starts to be a very bullish case. Sorry, 107. This is the line in the sand where you start to see some serious bullish market action. So around 100, I'm going to be looking to take some cash out of the markets, wait and see what happens. And if we flip these levels and go bullish again, then I will re-add to the market. Especially if we flip this 107 level, this is where I think things get very bullish. However, if we don't, I want to have some cash on hand so that if we do see this deflationary shock between now and when the money hits, which mind you is not that far away. Again, I think if you're pattern matching 2019, then the whole decline was like 6 months or so there. So the whole decline here, I'm expecting to be 6 months or less. And on top of that, we now know that big amounts of liquidity support is coming, and we know it's coming by mid 2026. So I want to start looking for a bear market bottom. If we do go into bear market, again, there's no guarantees. Bitcoin could just pump up at any time. But my strategy is simple. I'm going to be looking to raise some cash if we get back up to test this 100K level, which I think the market should want to do here. And if we flip it, then I'll want to stay in the market. I'll want to put those coins right back in, especially if we flip 106 or 107. That's when I'll be buying altcoins again, because I think that that's when the market will be super supportive, especially after all of this suffering. And I want to remind you here, okay, this is not the same as a 2021 top. I really like this tweet from Psychedelic here. Okay, in November 21, the total had surged 400%, the total market cap. Inflation was at 6%, on its way to hit 9%. Post $5 trillion stimulus, bank reserves at 4.2 trillion, TGA pretty much empty, QT approaching, PMI level 61 expansion, right? So you had the ISM at a huge expansionary level. We have barely even been able to touch 50 and have not been above it. Copper gold peaking, Bitcoin dominance to 39%, others push to 650% gains. And today it's pretty much the opposite, right? You can read through all these, we know about all this, but essentially all of the metrics are ice cold. This is not the same as the tops of 2017 and 2021. So if you're going to say, okay, well, we're seeing the 4-year cycle repeat, it hasn't repeated in many, many meaningful ways. And that's why if you're going to look for a period of weakness, I don't think that you should compare it to the period of weakness in 2022 or in 2018, but rather maybe the second half of 2019, and also understanding that there's a liquidity cannon coming. It's already been telegraphed, and we know quite a bit as of today about its timing. Now, this video has gotten pretty long, and I want to wrap up with saying, look, I'm absolutely bummed about the way this market cycle has gone. I did not expect it to go this way, as you know. I've always believed that crypto was awesome and worth dedicating my life to because it offers this opportunity for communities to, in a very punk rock way, take over the financial world with outside money, with individuals, with retail essentially running these campaigns. And that's why I've done everything in my power to try to guide my channel, my community, my projects in that light. And this cycle has really been the cycle that has not had any love for retail. This is the social risk from Benjamin Cowen's site. And as you can see, it's been ice cold this entire time. Just been ice cold. And as you can see, this red line, which is the social interest in crypto, hasn't been at a zero. It hasn't been at a zero like this since 2016, right? We were at 2016 levels before Ethereum's magnificent bull run, before the ICO mania of 2017, before any of this craziness that's really shaped the modern crypto economy, that's shaped what I now know to be crypto. It was before I joined crypto. That was the last time that we saw social interest in crypto this low. So something has been very different this time. And I still believe in that dream. I still believe that that's what makes crypto special. And that's why I'm so passionate about altcoins, is that that's where I've put my money, that's where I've put my faith, and that's what actually interests me about this particular industry. It's also undeniable that crypto has become a part of mainstream finance in a much more durable way. And that part of the maturation process is that some things have done much better than others, namely Bitcoin. But I also think that this is just a moment in time. And that when you zoom out and you take all the factors together, you still see that this is an industry where transformative gains and transformative growth through communities and through small groups of like-minded individuals backed by some seriously cool tech is still very much so possible. And I'm going to keep chasing that dream, rain or shine. I'm going to be doing another big video updating on Superverse and Black Hole, which obviously the token prices are way down, but actually the fundamentals of the Black Hole DEX are still trucking along. And there's some really exciting announcements that team has planned. I've invested along with my values, my excitement, my passions, and of course, my worldview as a builder in the space. And obviously, I wish I'd called every single move perfectly. And so I just wanted to share with you that if you guys are hurting watching all this play out, I am hurting too. And it's been quite tragic to me to see what feels like so much of the life force of crypto gets sucked out. But as sad as it is, I'm not defeated, and I will be here with you guys throughout whatever comes. And we will be figuring out the best way to navigate these markets together. Thank you guys for watching. I hope you guys enjoyed the video, and I will be coming out with a lot more in-depth research and in-depth topics about the world as it exists today. I hope you guys enjoy it, and I'll see you very soon on the next video.